for today, they have, if you see the market reaction across the board, government bond yields are rallying. BTPs are liking this move as well. I think that, they are walking the talk. They had to back their words with actions. Our strategists at Robeco were expecting that they needed to increase the purchase program, the pace of the PEP program, and they're doing that. So the market is liking it in government bonds. So I think that the other focus will be what will be the communication that we're going to see from Madame Lagarde, as well as what the projections will be in the updated GDP and inflation figures.
And Danae, I want to put that question to you, but perhaps maybe going one step further. Some people had been saying that maybe ECB were looking to go down the yield curve control approach as well, similar to what the RBA are doing. Do you think that that is still an option for the ECB, or is this line about PEP purchases going to be sufficient for now?
Thanks, Julian. Nice to be here today. I think the communication today was over what most people expected. As you said, it went beyond just a verbal communications management, and we will see the press conference later on. I think the fact that it's so explicitly stated was important. But the ECB has prioritized flexibility looking ahead, and the PEP is the program that has the most flexibility. So I think all options are still on the table.
Danae, I want to pick up on inflation, and we are due today to get to fresh forecasts from the ECB on their growth outlook moving forward and also on the inflation outlook. And clearly, heightened inflation expectations is part of what drove the rise in yields last week, but in particular, rising inflation expectations for the United States. Europe, meanwhile, is facing a slower vaccine rollout and less stimulus than in the U.S. So how are you thinking about the inflation outlook here versus the U.S. and even the U.K., which is also marching much more full steam ahead on its vaccination rollout?
Yeah, I think that's a really important question, because the divergence between the pace of recovery in the US and the UK to an extent versus Europe will be a very challenging factor for the ECB going forward. Not thinking about this meeting or even the next one, but let's think about in 6 months' time or around autumn, where the recovery will be very strong in the US, where we will have stronger inflation. And that may not necessarily be a very structural change in inflation, but it may be a transitory factor, but the ECB will still be operating in that environment. You also have the strategic review, the strategy review around that time. So I think it will be a difficult thing to navigate how to resist or to continue with accommodative policy and popping up more through asset purchases in the PEP in an environment where the U.S. recovery is steaming ahead and Europe is not to that extent, but it's still on its way.
A lot of food for thought there, and we're going to get into more detail around the sort of strategic direction of the central banks a little bit later on. I want to turn to Regina. You also have been making some comments around inflation. The title of your most recent report, Central Bank Watcher, Reflation Trend is Their Friend. How are you thinking about reflation when it comes to the European Central Bank?
Well, reflation and the hopes of reopening, has driven the global rate sell-off that we've seen. And, the move that we've seen in nominal and real yields, particularly across the Eurozone, is material enough for the ECB to not only verbally intervene, but also emphasize that they're going to increase the purchase program in PEP. Also, when you look at sort of the inflation concerns that we're seeing globally, particularly driven the move in the U.S. Stimulus, our estimates by our strategists is that in the Eurozone, yes, we're going to have a short-term uplift in inflation, potentially even headline inflation across Europe can reach 2% in May, as well as, continue to be in that level through August, particularly in the German debt increases. But, our view is that then, the temporary rise in inflation will dissipate into next year. So in this environment, yes, there's going to be still uncertainty in the path of economic growth. But U.S. fiscal stimulus has been a big determinant of, sort of the economic and inflation outlook. The other is that in China, one of the leading indicators in the global manufacturing path has been the credit impulse in China, and we're starting to see the credit impulse in China deaccelerating. So that could indicate that the manufacturing cycle, can slow down towards the end of the year. And so, there's still some uncertainty in the intermediate to longer term outlook.